Welcome to TheoTrade. This is Don Kaufman. It's May 30th, 2025. Few minutes to go to the cash close here on this Friday afternoon. It's a shortened holiday week of trade, but I'll tell you, there's no lack of volatility throughout the course of this week. I mean, markets just basically living and dying by the tweet. All right, should we even not call it a tweet anymore? It's X, it's a post. Not even sure what to call it. But surely this marketplace is living or dying by those tweets. All right, let's get right into it here on this TheoTrade weekend update. You know, as I look at the marketplace right now, I'd be remiss to say I'm a little bit surprised that the S&Ps have flattened back out. There was some sell-side activity here earlier. It was news related. By the way, earlier this morning, there was also sell-side activity. That too was news related. And if you missed the last, 24 hours of trade, the S&Ps rallied over 100 points. I mean, we were literally trading at 6,008, only to see some sell-side activity down to 58, 53, and yet back again. We're still about 100 handles south of, though, some of the highs yesterday. As I said, you know, it's a holiday week, but there's been no lack of that like insanity in terms of volatility. The only thing that's at issue is every one of those moves is coming strictly off of these tweets, this news. And I want to start in exactly that area. Let's not even worry about where the market's trading right now. Let's worry about what the market's trading on. One of the first things I want to point out in this weekend update is simply this. So a post comes out this morning, okay, from the administration, causes sell-side activity in the marketplace. It dealt basically with China, okay, not exactly living up to their end of the bargain. I'm not pulling this up to point out that particular post. What I am trying to show you here is something that you really can't even see. And that's what? That's actually right here, 5:30 in the morning Pacific time. Everybody aware that a PCE, okay, was dropped at that point? Now, the PCE, which is inflationary indications, was the lowest, okay, that it's been in 4 years. The marketplace completely overlooked PCE data. It wasn't, but what, a little bit, not even 2,000 contracts. And I remind each and every one of you that that PCE data or the CPI data, okay, just a few months ago was good for 60 and 70 point moves in the S&Ps. In fact, if I go back 6 months ago, okay, you actually had over 100 point move in the S&P futures predicated on a CPI print, okay? But the PCE data, that is the Fed's inflationary indicator of choice. And we didn't trade anything off of it. Nothing. Moreover, for more information on that one, you know, you look at the bond market. The bond market, okay, all right, saw a couple of minutes over here. It's a negligible move. The point I'm trying to make is, you know, if you're sitting here and you're looking like what matters to the marketplace, what matters to the marketplace right now, okay, is living or dying by the tweet. And you kind of have to come to that conclusion, that reality is that you're not in the driver's seat, okay? When you start looking, and now we're going to bring up the chart though, when you start looking at some of the technicals, let me show you what the technicals look like here, because a lot of traders, look, I'm a quant. I'm a much more quantitative trader, right? I look at everything in terms of probabilities, but those of you that are technical, let me bring up, this is a 30-day 1 hour, and I'm going to close up the left side bar. I don't care what the market's doing right now. Let's close up the left side bar, and I'll make a quick point, okay? That, which I'm highlighting right now, it's incredibly tight range, okay? Right back here, incredibly tight range, an incredibly tight range. I'm showing you, okay, 3 separate instances dating all the way back to late April, kind of mid-April. Anyway, three separate instances where we completely flatlined, we got tweeted on. We completely flatlined, we got tweeted on. We've been completely flatlined. We got tweeted to the downside, we got tweeted to the upside, but they got offset. What does it equal? Absolutely nothing. You realize over the last 3 weeks inside of this marketplace, and I love to show this because this is the end all be all. This is the S&P futures. Like there's no if and or but about it, right? Over literally the last 3 weeks, we're at 59, okay, 22 right now. Okay, look back. Where have we been? Absolutely no place. It's massively unchanged with a side order of tweet, of course. And what you do in a situation like this, okay, you get back, you kind of reduce risk a little bit and use spreads. And I have been so adamant about just that. Use spreads, use spreads, use spreads in every way possible. Because what we're facing is continually this merry-go-round of risks. And I hit this one nail on the head. Last week, we were all about the bond market, right? Talked about that. And when I say last week, not this holiday week, the previous week, we were all about the bond market last week and the debt, and it's going to be bad. And then what's coming this week? It's tariffs again. So we're back to tariff talk this week, and that freaked out the marketplace. And we keep going back and forth. Okay, that's why I say the merry-go-round of risk continues. Now, as I said, 3 weeks, the exact same range. If you take a look at the SPX, look, we could talk about this till we're pretty much blue in the face, but if you look at the SPX, look, yeah, it's a little higher. By the way, this week, okay, I'm not going to, look, this week, the marketplace finished higher. Well, last week, we actually broke the lower edge of the expected move. So what did we do? It's basically rallied back to where we were last week. Yada, 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 yada over the best part. There was no best part in this one. It was, again, a little chaos. Again, this last 3 weeks, again, to reiterate, another view over here in the S&Ps. Here's where we're trading right now. Here's where we were 3 weeks ago. Like literally down to the point where we're unchanged over 3 weeks. And, that can happen. We're just kind of oscillating back and forth on that news. But as I said to you a moment ago, I'd be remiss not to mention that I am surprised because what I see right now, maybe differs from you, and that's okay, but I see trouble in tariff paradise, meaning that, something I was bringing up throughout the course of the week. And again, I'm not trying to bear up on anybody over here, but I think we're going to have a tough time ahead, right? And I think we're going to have a tough time because I see trouble ahead, okay? And I want you to think to yourself, okay, how this is actually going to play out. And the question that I posed, live here at TheoTrade in our chat room with, well over 1,000 people in there, was, has one single deal been reached regarding any other sovereignty? Has one deal actually been reached on the front of tariffs? Right? You think about that. Moreover, do you see an easy path forward with China? I surely don't. And again, I don't mean to bear up, but as I was saying, I mean, the theme this week and this coming week, to me, is we're going to live or die by these tweets. And unfortunately, I think we might actually have some negative implications right in front of us. I actually believe that this morning, okay, this drop in the marketplace was the administration effectively saying China's not living up to their end of the bargain. They're not living up to their deal, and they've been nice up until now. I think that this was actually a warning shot being fired by the administration. They're actually warning us right now, okay? And that's why when I said, hey, I'm a little surprised the marketplace is flat into this, because quite frankly, I wouldn't go home long this weekend. And there's only 4 minutes left. And what I mean by that is, like, I'm not gonna own any stock that going into this weekend. I'd be nervous. I'd be very, very nervous on that particular front. Look, yeah, I know whatever, it's an opinion, but if it doesn't happen this weekend, surely some point this next week, I think we're going to get some pretty negative implications on the particular trade front. There's just not a lot of positive things going on right now on the screen. Moreover, okay, I think we're also going to see, okay, debt start to become a problem again. And the bonds rallied back up, saved by the bonds here a little bit. But I would expect the bonds are going to see some sell side activity this next week of trade. They'll head back down, maybe into the to the low, like 110 region, and people start getting very, very nervous at that point because again, it's that's obviously interest rates headed back up to some extent. By the way, just seconds left inside of the trading day. What do you got right now? Marketplace that continues to just try to edge a little bit higher. Now, last but definitely not least, again, we're going to keep it short and sweet. This was a holiday week. Last but not least, we are going to close, it appears, right on the upper edge of an expected move. So before you get all hopped up, the expected move, basically 126 bucks. What did we move this week? Well, okay, give it a second over here. 3 minutes left inside of the trading week, and we are a hop, skip, and a jump off the upper edge of the expected move. So in effect, what I'm saying is we did exactly what we were supposed to. But the entire week, I mean, literally the entire week, we just basically held onto, well, here, let's actually zoom in. This is the week at large. So obviously it's a shortened holiday week, as I said. We hit the upper edge of the expected move and just kind of held on to it throughout the course of the remainder of the week, and it was over and done with. Now, with a $126 move on a 4-day week, what are we looking at for next week? So next week, you're 7 days out, the expected move is going to drop. We're going to drop to about $104 of anticipation of movement. People, again, I would look at this and take the over on that one. What I mean by that is with a 5-day trading week, we just came out of a 4-day trading week. We saw every bit of $126 move and then some. I mean, we had like literally yesterday, we moved up over 100 points, down over 100 points. But all of next week, they're only pricing in $104 of risk. So look, keep your helmets on out there. Okay. I mean, look, this is not just not an easy marketplace to navigate over here. We got to get through some of the chaos of, what I would term tweets. I call them chocolate covered hand grenades are being thrown at you kind of left and right in this marketplace. We'll get through it. But I think there's going to be some tougher trade before we do just that. So as I've reiterated, okay, week in and week out, we're like 2 months into this where I keep saying, look, okay, I don't care whether you're bullish or bearish. As I said to you, I think some negative, tweets are about to hit this marketplace on the trade front, right? Tariffs are going to be really tough to get done. And deals are going to be tough to get done with some of the rhetoric that's going on out there. But the very bottom line of that, whether you want to be bullish, whether you want to be bearish, it's fine with me. Use spreads in every case. Okay, don't go out, extend yourself into too much risk in this marketplace, for you may regret that very dearly. Okay, this is a fast-moving marketplace. We all know that it's capable of moving, 200-300 S&P handles in a matter of moments. All right, that's it for this weekend's update. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.